Good morning, this is Bloomberg Daybreak Europe. Happy Friday, I'm Tom McKenzie in London. These are the stories that set your agenda. Israel formally approves the deal to end the war with Hamas. US President Donald Trump says he will travel to the region to be on hand for the release of hostages. Asian equities slide into the weekend, tracking losses on Wall Street amid concerns over punchy valuations for tech stocks. Microsoft's cloud crunch continues. Bloomberg understands the tech giant's US data center shortages are set to persist into next year, longer than the company had guided. And our next episode of Bloomberg Tech Europe airs today at 6:30 a.m. London time. In this episode, we look at how AI is reshaping the banking sector. We'll hear from top banking executives, including JP Morgan Chase CEO Jamie Dimon and Goldman Sachs' David Solomon. So there's a little bit of caution creeping into the equity markets right now. European futures a bit softer by 0.1% after the losses yesterday, around 0.3 by the end of the close. You had a similar picture over in the US as well. Valuation concerns, question marks about how far the AI theme can run. The FTSE 100 futures picture a little softer as well, pointing low by 0.2%. We saw UK banks under pressure in the session yesterday. S&P E-minis pointing to gains of just 3 points, looking for that next direction. Earnings season closing in, of course, and it could be that is the next catalyst. Nasdaq 100 futures looking to add 18 points, just 0.1%. Let's check in on the Asian session, and tech has been under pressure there as well. The HS Tech Index is lower by a little over 2%. HSI is down more than 1%. The CSI 300 over in mainland China down 1.4%. Across the benchmark in the region, you're seeing losses of 0.8%. Again, bit of profit taking, bit of caution around valuations, particularly on the tech front. The Nikkei over in Japan down 1.2%. We know that the potential next leader, of course, of Japan is meeting with members of that coalition, members of those parties today. So we watch for any developments out of Japan as well. Let's flip the board and have a look at the cross-asset picture. You have, of course, a focus on what's happening with gold and with oil. We'll get there shortly. The benchmark US 10-year is currently yielding 4.12, largely unchanged, a bit of stability across the Treasury market today after some selling yesterday. Euro-dollar at 1.15. The single currency up 0.1%. Brent, the biggest drop so far this week, $64 a barrel, below 65, down 0.4% on, of course, this agreement and deal in the Middle East. Gold below 4,000 per troy ounce, a little softer by 0.2%. So, talking of oil, President Trump says he will travel to Israel after the Israeli government approved a deal for Hamas to release its remaining hostages in Gaza in exchange for more than 2,000 prisoners and detainees. Israeli Prime Minister Benjamin Netanyahu called the developments momentous.
We're at a momentous development in the last 2 years. We fought during these 2 years to achieve our war aims, and a central one of these war aims is to return the hostages, all of the hostages, the living and the dead. And we're about to achieve that goal.
For more on this story, let's bring in Bloomberg's Jumana Persechi in Dubai. Jumana, walk us through the latest then in terms of how the ceasefire comes into effect and what to watch for in the hours and days ahead.
That's right. So the ceasefire has now gone into effect. That is something that the Prime Minister's office was saying yesterday. They wanted to ensure that the cabinet voted on phase one of the deal before implementing the ceasefire, and it passed yesterday. Really remarkable image there that you were just playing in the introduction of the Israeli Prime Minister flanked by Jared Kushner on his left and Steve Witkoff on his right. They were actually present during that security cabinet meeting, and which is really just reflective of the fact that the U.S. have really thrown a lot of diplomatic weight behind getting this deal passed, and how much of a vested interest President Trump has in getting it passed as well. So Israel has signed off on the agreement. Earlier in the day, we heard from Hamas officials as well, also saying that they too had agreed to the terms of the phase one, which means that in the next 24 hours, you will start to see the operational withdrawal of IDF to a pre-agreed line in the Gaza Strip that will still allow them to maintain 50%, more than 50% control of the enclave. And then in the subsequent 72 hours, Hamas would then be tasked with releasing the remaining hostages. And it is thought that there are still 20 hostages who are alive alongside the remains of 28 others, which operationally technically becomes slightly more difficult because there are reports that the whereabouts of some of those deceased hostages are still yet unknown. So we are entering into a very technically challenging 72 hours because in exchange for those hostages is also the release of the Palestinian prisoners and detainees. And part of the discussions over the last couple of days in Sharm el-Sheikh were simply agreeing to the names of some of those Palestinian prisoners that would be deemed acceptable from the Israeli side to be released. So all of that is going to happen. President Trump says that he will be there for the release of the hostages. It should be happening on Monday, maybe latest Tuesday of this week. But ultimately, what we've seen in the last 24 hours is a signing off on just phase one of this agreement. But Tom, still a lot of questions about whether this actually can lead to a permanent ceasefire solution.
And Jemana, on that point, and of course you're right to emphasize the fact that this is just phase one, as we move through the process around phase one that you outlined and detailed for us there, when you speak to people in the region, what is the level of concern that we don't make a progress beyond this? How sustainable is this? How much backing is there in the region? What are you watching for in terms of what would signal significant further progress from here?
Yep, absolutely. And I think the big one from here is how Hamas responds once they've lost their only quote unquote negotiation tool, their only leverage, which is the hostages. Do they go down the full process of disarmament? Will they completely lay down their weapons? They've already said that they're willing to not take part in the future governance of Gaza. But how far does that demilitarization go? And is there going to be an enforcement mechanism for ensuring that Hamas no longer pose, quote unquote, a threat to Israel and Israel's security, which is something, which is one of the key war objectives that Israel and the Israeli Prime Minister have been outlining since the beginning of this war. More immediately, though, Tom, I would say, in addition to the technical and operational challenges that will be forthcoming in the next couple of days, you also need to think about humanitarian aid. There's been a lot of focus from the international community to alleviate some of the pressure on the Palestinian population. The UN yesterday is saying that they're standing ready, they're on standby to deliver up to 150,000 metric tons of food and water. They have a 60-day plan in place to provide for shelter, even learning centers for children who've been not able to go to school over the last couple of years. So there is a plan in place. And then the U.S. yesterday said that they're planning on sending 200 troops from their existing CENTCOM representation in the region to help ensure the monitoring of the ceasefire and observe any violations. So there are plans in the works. We will have to see how this all gets implemented in the coming weeks.
OK, Bloomberg's Jemana Persic on a very significant moment, of course, for the region, but what to watch for in the hours and days ahead. Jemana, thank you very much indeed for that important update. Meanwhile, Bloomberg understands, and switching focus, that the US Bureau of Labor Statistics has recalled staff to prepare the September CPI report by month's end. Releases have been since the shutdown delayed, of course, but the development opens the door for fresh price data by the Fed's October meeting. Let's bring in Bloomberg's Valerie Teitel. So, Val, we may finally get some data out of the BLS.
Yes, but will it or will it not come before the Fed's meeting at the end of the month? The report from the Bureau of Labor Statistics said they aim to release it by month end, which is on the 31st of October. The Fed meeting convenes on the 28th, the decision on the 29th. So it is crunch time for the BLS in order to get this report out before the Fed meeting, which is what markets want to see. But they did say that they need this data because it's important to calculate next year's Social Security payments. The inflation adjustment into those payments is taken from the third quarter data. But that calculation normally takes 8 to 10 days once the sample month has ended. Now, they have not had any time this month to work on this report. So 10 days does take us to the end of next week, to the 24th of October. So we only have a few days to play with, and that is assuming that they get to work today. But regardless of this, the theme really of the markets has been in the absence of U.S. data. It's been very hard for the market to price any more Fed cuts into the front end, and that has led to some substantial dollar strength this week. Tom, dollar is at a 2-month high, and it has actually had the best week since the U.S. election, Tom. Bloomberg Dollar Spot Index is up 1.2%. Now, the catalyst for this mainly has been what we've had out of Japan. The yen has weakened substantially this week versus the U.S. dollar after that surprise win by Takaichi, the Abe-like economic head or supposed new prime minister for Japan. That has led the yen to weaken 3.5% on the week. Now, you can add to that the fact that we've also seen the new Prime Minister Takaichi really kind of pare back her tone when it comes to how dovish she's been on putting pressure on the Bank of Japan not to hike. She has sounded more hawkish in the last 24 hours, Tom, but it has not done anything to turn around the weakness of the yen. A lot of market participants out there thinking that if the yen does weaken substantially, that could really be the key thing for perhaps the government to change its mind and allow the Bank of Japan to hike rates at the end of October.
Okay, yeah, and we're seeing a little bit of strength in the yen in the session today, to your point, and worth putting a pin in that stat there. November 2024, the best weekly gain for the dollar since November of 2024, to your point, Bloomberg's Very Total. Painful being short the dollar right now. Now, Bloomberg has learned that Microsoft's data center crunch will continue for longer than expected, as many of its US data regions are experiencing shortages of physical space or servers, underscoring the software giant's struggles to keep up with cloud demand. It's a similar picture across Google and Amazon. Let's bring in Bloomberg's AI reporter, Sarita Rice. Sarita, thank you for your time. Talk us through what this means then for Microsoft and the broader AI industry.
Yes, our reporters have learned that Microsoft Azure is not able to meet the demand from customers, and that is really not so great news for both the AI industry as well as Microsoft and its competitors. Azure is Microsoft's major growth engine. Cloud actually generated $75 billion in revenues in the fiscal year of 2025, and really outpaced the expansion of all of its competitors, including the likes of Amazon and Google. So cloud and AI data centers are critical for Microsoft. But quite beyond that, Tom, there's a massive investment surge. About $375 billion have been pledged in 2025. That's a 67% increase from the previous year. Yet cloud providers cannot build fast enough. They cannot
It looks like we may have some technical issues with Sarita there. So we'll try and re-establish the line. This happens sometimes, but we were just getting an update in terms of Microsoft, and it has all this demand in the pipeline from its customers. But the top line from this story is that the inability to build out data centers quickly enough means that Microsoft is facing that challenge of actually supporting, on the cloud business at least, many of their customers, particularly acutely in the United States. And there are examples of customers that are having to switch to different states to access that cloud data offering from Microsoft. But it also shows that continued demand as well from the AI story. This is a CPU and GPU piece as well. And it reminds us of the demand that continues. Sarita, I think we've re-established the line with you. Just talk us through about the importance of the data centers to Microsoft's business. And you were touching there on how long it takes to build out these data centers. This is also a supply chain issue as well, it seems.
It is an absolute critical piece of the AI supply chain, Tom. Without these data centers and the GPUs that they house, AI models cannot be trained, tools cannot be built, AI cannot be rolled out. So innovation will get hampered because of this shortage of AI cloud services. But quite aside from that, I think there will be a skew in what becomes available to the market. Big AI players will get outsized outlays of cloud services, and the smaller players will suffer. This will, in fact, increase the inequity in AI.
Okay, Bloomberg's Sarita Rai, thank you very much indeed with that update and the challenges facing Microsoft. But the broader picture, what it tells us about the demand and the lack of data centers still, despite that, $375 billion spending pledge from the hyperscalers. Coming up, we will discuss the market movers this morning. There is a fog rolling in. Remain risk on, but add some ballast. That is the view from Matt Orton from Raymond James Investment. We'll get his insights on equities, gold, and how to think about the AI trade. Plus, how is AI reshaping the banking sector? We dive into that in the next episode of Bloomberg Tech Europe. That starts at 6:30 a.m. today. This is Bloomberg. Welcome back. Now, gold has steadied after falling just below $4,000 an ounce, while silver pulled back after a rally that sent prices to their highest levels in more than 40 years. Gold sell-off has coincided with a slide in U.S. equities. A sell-off, we should contextualize that, of course. It broke through $4,000, the highest level on record. Let's bring in Matt Orton, Chief Market Strategist at Raymond James Investment Management. Matt, great to see you this morning. Thanks for coming in bright and early to the studio. We are seeing dollar strength and the strongest week that we've seen for the greenback since November 2024. So that's putting some who are short the dollar maybe in an uncomfortable position. But it also raises questions about your view on gold, because you do think gold still at these levels remains important ballast at a time of, well, you described fog rolling in. There's a lot to unpack. Let's start with your view on gold and whether it's challenged by stronger dollar.
Yeah, absolutely. Well, it's great to join this morning, Tom. And I'm still optimistic on gold. So my price target has been $4,000 an ounce. So it's not surprising to see the market pull back a little bit after hitting such a structurally important level. But I think the trend of dollar weakness is likely to continue. And the idea of gold serving not only as a resource for central banks due to this theme of de-dollarization, continuing to diversify foreign reserves, and more retail investors finally starting to move in, I think the tailwinds for golds are still there. I'm still bearish on the dollar longer term. And perhaps this rally we're seeing this week is just giving a good reset opportunity for what is arguably a very extended price momentum and price action for gold over the past handful of weeks.
What's your next target for gold then?
So next year, my target's 5,500 for gold.
5,500 for gold.
5,500. I think based on central bank buying activity that still has to take place, there is a significant amount. You're seeing a lot of diversification across portfolios. So I've spent this past week talking to clients here, and there's still a lot of pessimism. Despite the rally that we've had, there's a lot of thoughts that AI is in a bubble. This market is too extended, which I don't agree with those narratives, but it's out there. And so as we talk to clients, how can you feel more comfortable, perhaps ballasting your portfolio from some of these headwinds, especially, I'll say, the chaos that you have, at least with the U.S. fiscal situation? Gold is a very natural extension to do that, and it has actually worked much better this year than even traditional treasuries in providing an offset to downside in the equity market.
Okay, so you touch on equities as you explain your view around gold with that target of 5,500 for the yellow metal. On the equity story, the anxiety clearly is around the level of financing, but also the structure of the financing involved in this AI shift that we're seeing in terms of the circular nature of some of that, as some would describe it. And today, a reminder that Softbank in talks for a $5 billion margin loan backed by arms stock. When people point out these levels of financing and the structure, is that not, are we not seeing, at least on some areas, frothiness, concerns that in some parts of the AI theme, we are now starting to see risky bubbles?
Yeah, you know, Tom, I would say there's definitely frothiness and euphoria in some pockets of the AI trade, but it's not in the hyperscalers and it's not in the largest names that continue to invest in their future by using cash and not really leverage. So the balance sheets of most of the hyperscalers is incredibly strong. These are some of the most well-capitalized companies in the world, and it's hard to argue against their ability to finance CapEx just using free cash flow. So I don't have a problem with the hyperscalers making the continued investments they need. And we saw this morning the news from Microsoft that there's still data center capacity constraints on their ability to grow. You've heard for the past 2 quarters Amazon saying the exact same thing with respect to why they missed expectations on Azure. There's not enough capacity. So when I look at that as an investor, Sure, you want to continue to invest in those hyperscalers, but for me, it's been all about AI 2.0. It's about finding the tangential plays to artificial intelligence, the data center construction companies, the electric equipment companies who are involved in providing the cooling solutions for all of the GPUs that are being used in the data centers. Those names are finally taking off, and I think those rallies are backed by really strong earnings momentum.
And that takes you to Europe. You say there's opportunities around AI in Europe.
There are. I think when you look at what the bottlenecks could be, Tom, for artificial intelligence in the U.S., it's a lot of the power constraints, too, that you're going to eventually have on the ability of data centers to operate. So when you look over to Europe, where some of the power components are actually being manufactured, say in Germany, there's less power density. There's perhaps an ability or extra capacity to be putting up some of these data centers and a willingness to make those investments because Europe is not very levered to this AI trade. So I think Europe could be an interesting area, especially on the industrial side of the house, to see some strength in the equity markets.
Okay, Matt, thank you very much. In time, we've run out of time. There's 5-10 other questions I could easily put to you right now, but we really appreciate your insights. 5,500 for gold is the target. Think about the balance sheets when it comes to the hyperscalers, and there are opportunities in terms of the energy and the infrastructure and the supply chain story around AI in Europe. Matt Orton, Chief Market Strategist at Raymond James Investment Management. Now, the FT has reported, meanwhile, that former UK Prime Minister Rishi Sunak has been appointed as a senior advisor by Microsoft and artificial intelligence startup Anthropic. Sunak, who remains an MP, worked with both tech groups as UK Premier, setting up an AI safety summit in 2023. Sunak's twin appointments mean he will be advising rivals in the push for AI breakthroughs. And Bloomberg has learned that Softbank is in talks, as I mentioned, to borrow $5 billion from global banks, refilling its coffers at a time that Masayoshi-san is accelerating the Japanese investment firm's bets on artificial intelligence. We understand Softbank is close to signing a deal for a margin loan secured by shares of its chip unit, ARM Holdings. The capital will fund additional investment in OpenAI. Coming up, Bloomberg Tech Europe in this episode. We're going to look at how AI is reshaping the banking sector. Features interviews with Jamie Dimon, of course, of JP Morgan Chase, and Goldman Sachs CEO David Solomon, along with the CEO of Klarna. Stay with us for that episode. This is Bloomberg. A grand jury has indicted New York Attorney General Letitia James over fraud claims after calls from President Trump for her prosecution. Court filings show she was charged with bank fraud and making false statements to financial institutions. In a statement, James calls the charges baseless and a weaponization of the justice system by the president. The FT reports the U.S. Department of Justice has opened an inquiry into the collapse of First Brands Group. Separately, U.S. court documents revealed a joint venture between Norinchukin Bank and Japanese trading house Mitsui faces $1.75 billion of exposure to the bankrupt auto parts supplier. And the U.S. has launched a bailout for Argentina, offering $20 billion in financing and carrying out a rare intervention to prop up the peso. Treasury Secretary Scott Bessent announced the currency swap and government purchases in a social media post. The peso swung from steep losses to a gain. Trump's support for ally Javier Milei comes ahead of this month's midterm elections in Argentina. Coming up, Bloomberg Tech Europe. In this episode, we're going to look at how AI is reshaping the banking sector, what it means for jobs, what it means for the customer experience, what it means for the internal units of these banks. We're going to have insights from Jamie Dimon, the JP Morgan Chase CEO, and Goldman Sachs CEO David Solomon, along with the head of Klarna. You won't want to miss it. Stay with us. This is Bloomberg.